Hey everyone, happy Thursday, January 25th. It's about 10:45 on the West Coast and time for another market update. It's been a pretty up and down week since I last left you guys. The markets are pretty much bracing for a big inflation number tomorrow, and then next week is the Fed's next meeting. So let's see what we did get this week, however. First thing we got going back to last Friday was December existing home sales. Those came in lower than expected. It was supposed to be flat, basically 0% gain or loss, and it came in at negative 1% month over month. Year over year, it's down 6.2%. So taking a closer look, again, keep in mind that most of these people that are closing on homes in December were shopping in October, maybe November when rates were at their highest. So that obviously has a lot to do with this number being down, and then the lack of inventory. So medium home price was down a little bit, but again, keep in mind that has to do with the mix of sales. Again, year over year, we're at 4.4, or I'm sorry, the year over year median's up 4.4%. The year over year sales is down negative 6.2%. The inventory actually dropped 11.5% last month. So, when we're expecting more inventory coming to the market, it actually kind of went down a little bit. So we'll have to keep an eye on that as we go in, through the winter and into the spring selling season when hopefully we'll see a lot more inventory hit the market. And again, that's about a 3.2 month supply. Average market is about 4.6 months. So we're still, undersold there. 29 days on market, 50% sold in less than 30 days. That seems to be ticking down. First-time home buyers ticked down a little bit, cash buyers ticked up, and investors ticked down. So again, this is people probably shopping in October, November. It'll be interesting to see how these numbers, when we get to January and February, when rates have gotten better since then, to see what those numbers look like. Next thing we got was today we got December new home sales. One little difference with this, these are signed contracts in December. So they didn't close. A lot of times, obviously, it's a new home sale, it's a build. It might just be getting built. So that was up 8%. And then year over year, it's up 4.4%. Taking a closer look, like I said, it did tick up 8%, and opposite of the last one, we did get some probably positive movement from rates coming down because these are people signing the contracts in December, so rates had already dropped from them, I think, mid-October highs at that point. So, we did see some positive movement there. Total inventory ticked up just slightly, 4K from 449 to 453K. And so, we need more than that, so hopefully that keeps ticking up a little bit. We don't want to be oversaturated, but at this point, we obviously need more inventory on there to make things more affordable for people. So good sign that, this is our look at, rates coming down. We did see some activity on the new home sales side at least. So we'll probably see some on the existing stuff as well. Next thing we got today, this was a really important one, the important one this week besides inflation, is 2023 quarter four, the first reading at the GDP. So it came in at 3.3%. It was expected to be about 2%. And last quarter three, the final reading was at 4.9%. So down from then, but still a strong figure at 3.3. And but the positive for us on this was this prices paid index. So the prices paid was supposed to come in at 2.2%. Previous was 3.3. That came in at 1.5%. Core prices remained at plus 0.2. So that has a direct effect on inflation. Prices being paid are lower. That's awesome. That should bode well for inflation going forward. So that actually the market's reacted really well to. So hopefully that leads to good inflation data tomorrow, which we'll get into in a second. Also, we got today. It was a busy day today. It's actually, most of the news was all today. Initial job claims came in at 214,000. The estimate was 200,000. I think last week was 187,000. Continuing claims ticked up. So it'll be interesting to keep an eye on this to see if these start to tick up now because they have been at really low levels. Continuing claims have been at high levels. So as we talked about, it just kind of seems like, companies are trying to hold on to employees as long as possible. But when people do lose their jobs, they're having a harder and harder time finding full-time work, more second jobs and part-time work. So again, Fed's paying really close attention to employment. We got to pay really close attention to employment. So where does that leave us? Basically where we were at last week. Last week we were at 6.89. Today we're at 6.90 for the average 30-year conventional for a really good borrower. And again, this is a lender survey. So this is all, a bunch of different lenders across the country, sending in their numbers each morning. And, so each person's going to vary here, but it's a good way to track at least where things are headed. So we're at 6.90 today. Again, last week, 6.89. We dropped a little bit on Friday because we had some good, data come out. But, again, this week's been pretty up and down. So, everybody's kind of waiting for tomorrow where we get PCE. The Fed's favorite form of inflation is coming out tomorrow. Remember, they want that core PCE to be down to about 2%. All signs pointing to us getting some help there. I think, the markets are expecting core to drop from, I think, 3.2 to 3. If we see that, if you see a 2 number on core, if you see this in the news, that's going to be good for us. But we want PCE. We want to see good inflation data to keep the Fed, in good state of mind as far as that goes. Because next week, coming up on the 31st, that's when they'll be making their next Fed rate hike announcement. And full expectation is there'll be, again, nothing happens. There'll be a pause. So no hike, no cut. We would highly prefer a cut, but that right now is looking, less likely in March, but still, the markets are pricing about a 50% chance of the first cut happening in March, but the sooner the better for all of us. The sooner they cut rates, the sooner mortgage rates will make some, really nice headwinds. So we'll have to keep an eye on that. And really, again, since we already know kind of what they're going to do, the real important part is what they say at the press conference afterwards. If Chairman Powell says nice things and makes us all think like, hey, they know inflation's under control, they can't overdo it on hikes, maybe they got to cut. That kind of language is going to make the markets react positively. If they come out very hawkish, we don't know about inflation and maybe we can't cut, anytime soon, that might make the markets react negatively. So that's what we got to keep an eye on this week. Hopefully by the time I talk to you guys next week, I'm telling you about great inflation numbers and how the Fed said nice things. So if anybody needs anything at all, please don't hesitate to reach out. Otherwise, have a great day and have a great week. Thanks, guys.